Hello everyone. In this presentation, I will provide you a broad overview of the Lynx Simulations website. The website is at www.lynx-simulations.com. Once your team or firm has been registered with this database, you receive a passcode which can be submitted in this particular area. So when you click on Go, you have access to the specific data set that is associated with that team or firm. But for now, for the instructional purposes, let's look at a demo company which has already been established. So I click on Lynx Demos. Now within this drop-down menu, I choose the simulation that we are going to look in, that is Lynx Supply Chain Management Simulation Extended Edition. And I click on Access Lynx Simulations Demo. Now here you notice you have results in Word format as well as Excel format. And you also have several buttons which help you to make decisions. Underneath the results, you know what exactly your current decisions are, so it is helpful for reviewing what kind of decisions you have made in the current round. Now the current round is month 7 because you already have results till month 6. So if you click on current decisions, you know what all has been changed. So it's a good idea to review this just before the deadline to ensure that it's in line with what you were thinking. Month 6 decisions helps you to know what were the decisions in the previous round. The activity log file informs you when different inputs were made over the course of time. So it's starting on 14th of January 2012 all the way till 30th of December. In fact, from 30th December 2011 to 14th of January 2012, different inputs that were made along with the IP address from where it were made. You have email addresses which provides information about the email IDs of all your teammates. The pro forma projections, which is telling you how much your performance is going to change in the next round with the kind of inputs that you have made for the current round. So this is kind of a projection. But one of the fundamental assumptions that has been made here is the sales volume is going to be exactly equal to your forecast. Now obviously we know that most of the time there's an error in the forecast. So this sales volume is not going to remain equal to your forecast. So while you're looking at these projections, you have to keep that in mind. But still, I think this kind of a projection helps you to understand approximately what your performance could be, as long as you can take into account some variations within the sales volume, within the costs associated with your performance. Now looking at the decisions that you will be making, let's go from research studies backwards to product development. Research studies help you to strategize, to understand what you should be changing fundamentally within your company. Now in the beginning, for the first 2 rounds, I don't think research studies have too much of significance because all the firms are at an identical level of performance. But after 2 rounds, you would like to see what exactly other firms are doing with respect to different aspects of it. For example, you would like to know exactly what the balance sheets of different firms are. You could specify which one. I mean, as many you will specify, it'll cost you that much more. You could also, for example, look at configuration analysis, which is very important when you are planning for new product development, because in month 3, or rather decision 3, you are allowed to change the product. But before you change the product, it's very important to know what would happen if I change it in one way or the other. So all that price sensitivity, benchmarking, manufacturing, benchmarking on different kinds of performance, they're all very useful if used effectively. It costs you money, but you can take advantage of that information. The other out here is simply to help you put a firm name. You can put some name which you think you want your company to be represented as. Information technology allows you to synchronize with your carriers for transportation, with your suppliers when you're sourcing your raw materials and semi-finished products. So you can identify the specific supplier, the specific carrier with whom you want to have IT synchronization. The synchronization costs you money, but it increases the service level and reduces the overall lead times or defects that might be otherwise the case. You can also ask for some of these reports that have been mentioned here. Right now, they have been all indicated as no, but you could ask for specific reports that would be of importance. Forecasting perhaps is the starting point in most of the decisions that you will be making, because ultimately for the next round you first have to forecast what you think the sales would look like. Now remember that forecasting cannot be simply based on what you sold in the last round. That's important, the trend is important, but you also have to keep into account any fundamental changes that you might have made this round, like changes in pricing, changes in products, changes in IT, services and all those things, as well as any changes that competitors might have made, which you would either know through research studies or you would anticipate them based on general trend within the industry. So when you click on forecasting, you actually have to do two sets of forecasting. One is the short term and the other one is the long term. When you click this next button, you will go to the long term. So first look at the short term sales forecast. If nothing has been changed, you will see that these blocks have been green, indicating that these values were the same that you had in the previous round. So once you change them, these will become white. But you will be forecasting for both products in both channels in all three regions of US, Europe, and Asia Pacific. So the specific numbers, how much you're going to sell for these products, and that will determine what your forecasting accuracy is in a given month. The long-term forecast is what you think is the aggregate sales that will be there for product 1 and product 2 2 months from now and 3 months from now. The forecasting accuracy takes into account both short-term and long-term forecast and finds an average of that. The generate demand decision is something that you can take after the first round. In this, you can change the price. You can decide whether some of these products you want to stop actively selling in certain regions. Right now, all these products are being sold in all regions. That's why yes has been selected, but you can choose no for some of the regions if you believe that would be more helpful for the company's performance. You can also change marketing spending, and once you change these dollar amounts, what will happen is that your sales in that region will be affected accordingly. The recycling and recovery, that is how much you want to incorporate environmentally conscious product within your operations, can be specified here. So right now it's 0 for region 1, 2 for region 2, and 3. Region 3 has 0. Now region 2 Europe, because of their strict environmental regulations, the minimum that you can choose is a 2. But for the other regions, you can choose a 0. When you click on this question mark, you can actually get a help on what exactly these numbers really mean it's a PDF which will open up, and it'll tell you that 0 basically means that you're keeping it at the lowest possible level for different environmental programs. Whereas if you go from 0 all the way to, let's say, 6, then it costs you quite a bit, but you are providing full advanced bacterial recycle and recovery of the old model, as well as some discounts for the new purchases. So there are some additional things that you're doing to be environmentally conscious. Right, so now we come to service. In service, you can outsource services in the 3 regions. So right now, the service outsourcing that has been chosen is number 2. And the specific details of what number 2 means, you can always see that in the links manual. So links manual will be important when you're making these decisions to understand what number you should be putting for the specific program that you want to have for your company. Transportation, you have different carriers, and each carrier has a certain service capability, cost. So you want to ensure you choose a carrier that is in line with your strategy of whether low cost, responsiveness, whatever you have chosen for your company. And it gives you a summary of how much the ending inventory will be based on what the beginning inventory is, how much the shipments are going to that particular location. This is region 2, Europe. And then minus forecast, because the forecast is what you will be using out of those shipments, and then telling you what the ending inventory is going to be. So for example, for product 1, you have surface transportation of 10,000 units using carrier N, and there is none from using air. So it tells you what the beginning inventory for this particular product was, plus the shipment, minus what you have forecasted to sell, equals what the ending inventory for this product will be. Now you are aware of product 1 and product 2 as being hyperware and metaware. Product 0 is something which relates to the postponed production that I will be discussing in a separate presentation. So this is something which you can make semi-finished parts or products and then ship it in unfinished form to different distribution centers in other regions like Europe and Asia Pacific, and complete the final assembly at that location. So those postponed production options, if you want to execute, you will have a product 0 associated with it. Coming to distribution, at the beginning it will be required to create a supply chain design. So you will specify whether you want to have a distribution center, and secondly, whether it should be outsourced or owned. You want to also specify RFID. You want to have emergency carrier. Who should that be? Which carrier would you choose as your emergency carrier? Do you want to have cross-docking options? Finished goods inventory, surface shipping, and semi-finished products or sub-assembly components, surface shipping. You are specifying exactly what the requirements here are. For manufacturing, you can provide what your production quantities in a given month is going to be for product 1 and product 2. In case you are involved in postponed production, then also for product 0. Just as in the case of transportation, here also it helps you to gain some insights on what your ending inventory is going to be, estimated ending inventory, based on what your beginning inventories were, what your production for this particular month is going to be, minus the forecast sales for that region, minus the planned shipment to DC2. Now remember that the manufacturing is happening in region 1 because US is where the plant is located. But once it has been produced, if in case you own a distribution center in the other regions, in our case, in this particular company, you have a distribution center in region 2, so some of those will be shipped to DC2. which is what you specify in the transportation decisions. So that will show up here. Minus forecast sales for region 3. In this particular company, you don't have a distribution center in region 3. So what happens is you are directly selling to the customers in region 3 from the distribution center that is located in region 1. So it shows minus forecast sales for region 3. So that's what is being deducted from all the production. If in case you had a distribution center in region 3 as well, then it would have said minus planned shipments to DC3. So you have an understanding of ending inventories. You also have information about emergency production. This is something which helps you to make sure that in case you are falling short in terms of the time required for production, you have the capability of producing as much as 5,000 units at a given time. So you have a level that you can specify, and this can be changed. You can look at the manual to decide what that number should be. And then finally, production volume flexibility. You can make your own operations more flexible, and that is something which costs you money every round, but it helps you if there is a lot of fluctuations in the forecast, because it will help you to produce that much extra if required. Procurement. You procure the raw materials, so those are mentioned here, alpha and beta. So just as in manufacturing and transportation, you get an estimate for the ending inventories. And then you also procure subassembly components. So you click on next, and here you have the subassembly components gamma, delta, and epsilon. So you can choose a specific supplier. They have chosen a single supplier for all their subassembly components, and it tells you what the ending inventories for each of these subassembly components are going to be. Okay, so one of these subassembly component is common for both hyperware and metaware, whereas the other one is specific to hyperware and specific to metaware. That's how they differ. They have one common component and one specific component. You also have to keep in mind that one of these subassembly component, that is epsilon, has a longer lead time than the others. So you normally get it a little later than what you normally get for other things. So you have to keep that in mind while you are making decisions for your procurement. Once again, you need to keep an understanding of all this by looking at the information provided in manual. And this product development is something which you do after the second round, and that is optional. You can choose to change the product. Now when I click on product development, what you notice is that we have two products, hyperware and metaware, and the product configuration is nothing but how much you have decided to have these different raw materials. You have decided to have the bandwidth, the warranty, the packaging, and R&D spending. So if I change this alpha kilograms from 5 to something different, beta kilograms from 5 to something else, the bandwidth from this to something else, I am fundamentally changing the product. Now, important point to remember first of all is that you can only make a maximum of one reconfiguration per month. And second, as I had mentioned earlier, before doing any of the reconfigurations, you have to ensure that you have looked at the research studies associated with it. There is a patent infringement penalty that you have to pay if you change this product, and this product which has been changed is very close to somebody else's product's patent. So for example, if I make this, let's say 2, 2, and keep these as is, and if there's some other company which has the same configuration and they had done this before your company, then you will be paying patent penalty to that company. So you have to keep those things in mind, and that's why research is important before you make these changes. Also, when you make these changes, your product changes, therefore your forecasts could be very different from what were the case till that point. So you have to keep that also in mind. So now all that gives you the tools to put your data, your decisions, and then once you have submitted those decisions, you get your results about half an hour after the deadline through email. So you can then it'll inform you that your results have been processed, and you can then look at your results to see how you did in a given round. Now, along with this, you also have this current bulletin for industry. So it tells you industry-wide happenings, what exactly is happening within the industry. So for example, if I click that, here it tells you, for example, that total industry profits were so and so. Firm 5 leads industry in market share. Firm 2 has the second highest market share in industry. So all this is at the industry level. It also tells you about product launches, if there's any unlaunches, in other words, somebody has stopped selling a product. All those things also are very helpful to understand where this industry is going, and therefore what you should be doing with your firm. So overall, I think there is a lot of opportunity to learn about supply chain management by using all these different tools. Now, if we go to the results, let's look at the document here. You'll see that this result of the company has been distributed into, first of all, the first page is a summarized version of your financial, operational, and customer-oriented performance. It tells what the firm's performance are, and then what exactly is the industry's worst, average, and best performance. And then if we go down, it tells you the sales volume, unfilled orders, what the price is again a summary of how much your revenues are, product costs are, and your net income is. It gets into more detail as we go further. So here we have a corporate profit and loss statement. Okay, so this provides you in general how the company is doing, and then again at the product level what your net income was. We will be discussing this in a separate presentation. So right now I'm just kind of highlighting what you get here. You also have historical corporate profit and loss statements, so you understand what the trend is as it relates to your net incomes. Going down, it tells you at the product level, product 6.1, which is your hyperware, profit and loss statement for month 6 in each region, and that also is very helpful to understand how you're doing in each of these regions. At the bottom, it tells you what all you have considered for each region, whether you have a distribution center, whether using RFID or not. It also has your product configuration, how much R&D spending you have, so everything that relates to those products. This is for MetaWare. Then you have your balance sheet, assets and liabilities. So this tells you how much cash in hand and other things that you carry going forward. At the bottom of your balance sheet, it provides you information about epsilon deliveries. Remember that epsilon has a longer lead time. So every time you get your results in the balance sheet, it gives you an indication of how many epsilons are expected and which supplier is going to deliver it and what is the mode of transportation. Is it surface transportation or air? Okay, so 30,000 units from supplier D using surface transportation. Next is your cash flow analysis report. Followed by finished goods inventory report. And again, the finished goods inventory report is something which we will discuss in a separate presentation. Returns report. So all that information has been provided to you. Procurement inventory report. So it's an extensive document which you should consider while making decisions at given point in time. Okay. Now let's look at the Excel version of the result. So here you have a graphical representation of how your net income to revenue is doing. Remember that these are the metrics that eventually get converted into a composite score. Not only these, but many others. These are some of them. And you have to know what is happening in the long run with all these performance measures. So it provides you a snapshot of how your performance has been. It also provides you information about sales volume, revenues, gross margins, your decision history, your forecasts, and all those things that you saw in your Word document presented in the Excel document in a slightly more readable format. Now with that, I conclude this presentation. And as I have mentioned several times during this presentation, your manual is an important document. You will have to read and reread that manual as you go about making your decisions, because a lot of the information that you will need while making decisions is out there. So make sure you do that, and good luck with your simulation. Thank you.